If you want the highest credit scores, make a payment before your. So, to understand how your payment affects your credit score, just remember these two dates that are associated with your billing cycle. The payment due date. Your payment due date is the day that your credit card payment is due. Now, notice that your payment due date is typically between 20 to 25 days after the close of your billing cycle. And if you pay late or less than the minimum payment, you will be charged a late fee. If you pay less than your full balance, then you will be charged interest. So next you have something called your statement date. Your credit card statement date is the end of your billing cycle. On this day, your issuer produces a statement of all of your account activity for that cycle, which can vary anywhere between 28 and 31 days. And that credit card statement will list all transactions made during that billing cycle, any fees or interest charged, and your current remaining balance. And you'll also see things like late charges, interest fees, and any annual membership fees. As you can see, my statement date is all over the place. But outside of simply reporting transactions, your statement date has another major role. You see, credit card companies use the information on your statements to report to the credit bureaus every month. And simply by knowing your statement date and your payment date, you now have everything you need to pay your credit card at the right time to get the highest credit scores. And here's how to do it. If you want the highest credit scores, make a payment before your statement date. Here's why. Credit card companies report your credit utilization once per month using the information found on your statements. And your credit utilization is the percentage of your credit line that has been used. And utilization makes up a large part of your credit score, 30%. And speaking of 30%, 30% should be the highest your utilization should be by the end of your statement date. Because the lower your utilization, the better your credit scores. And anything over 30% is considered bad. So once again, it is best to keep your utilization low as you approach your statement date, paying very close attention to the fact that your statement date can change month after month. Let's put this in visual form to make it easy. Say the day is August 20th and my statement date is August 25th. I have a credit limit of $10,000 and so far this month I've used $7,000, which is normal for me. If I make no payments by the statement date of the 25th, the credit card companies will report a 70% utilization rate, and that will hurt my credit. But if we take the same scenario and add a payment of $6,000 before my statement date, I'll show a lower utilization, around 14.2%. So as you can see, by making a payment with utilization in mind before my statement date, you are able to report a low utilization to the credit bureaus, which again accounts for 30% of your score. So now that we know how to get a low utilization reported on your credit, let's go ahead and save some interest while we're at it. If you want to avoid a late fee, pay the minimum due. If you want to avoid interest charges, pay off your entire balance before your payment due date. This is because any remaining payments after your payment due date will accrue interest, and not the kind that's considered good debt, as the average credit card APR is between 19 and 25%. And to make matters worse, credit card companies are known for increasing your APR whenever you make a late payment. So it's critical to be aware of your credit card policies regarding late payments. Now, what's nice is that you can typically call your credit card company every 6 months or so and ask for a reduction in your interest rates. And that's if you maintain a pretty good payment history. In addition, many credit card companies allow you to move your payment date by calling, or you can even do it online. And I can think of a few reasons why you might want to move your payment date, like aligning your due date with other bills that you have. This way, you can keep most of your bills around the same due date, or allowing your credit card payment date with the day you actually get paid, as it may be easier to make your credit card payments at the same time that you get paid instead of sometime in the future. Or maybe you want to push your payment date closer to your statement date. This allows you to kill two birds with one stone. You get to keep your utilization low and maybe make more than a minimum payment to pay off your credit card. Or maybe it's simply to help you avoid late payments. You may need to move the date back some to allow yourself more time to pay, because paying your credit card on time may not be feasible for everyone every month, but it's critical to make those payments as soon as possible to avoid late fees, high interest charges, and late payments reporting on your credit. And if you want to avoid interest payments, focus on keeping your utilization low by your statement date and make at least the minimum payments. Now, you may be wondering, is it a good idea to pay my credit card early? And the answer is that it depends. If you're paying off your balance for the previous billing cycle, this is a good idea to help your utilization remain low. Heck, it's even a good idea to help you avoid missing a payment. On the other hand, paying off your credit card as soon as you buy something may actually hurt your score, because your balance is reported once a month, and you're likely to show a 0% utilization when you pay something off as soon as you buy it, which can appear that you're inactive, which can actually hurt your score. In fact, showing some utilization is often better than showing no utilization. But just remember that you want to keep your utilization under 30%. And if you can go lower than 30%, even better. Now, if you haven't already, go ahead and give this video a like. It truly helps this video to reach more people. And subscribe to the channel to help you save more money, grow more money, and build big businesses. I'm Karan, and I'll see you in the next video.